Good evening and welcome to Old Man Wisdom. It's the 18th of March 2022. There's a few hours left before the Forex markets close, and of course this is our regular weekly review of the EURUSD. We've got two examples of what the market has done and what we might expect it to do next week, both using an indicator based strategy and a pure price action based strategy. So stay with us and let's get into the video. So firstly, this is the indicator based strategy. You'll notice here the little blue rectangle that represents where the markets opened on Sunday evening here in the UK, and the EURUSD has steadily just gone up all week long. So let's just zoom in a little bit. You'll notice here that we had a sell signal right at the end of last week, which we didn't take because the stop loss was just way too large, and so that doesn't meet our rules, so we ignored this one. Even though price was under this multi-time frame moving average, the stop loss was just too big, so we didn't take this opportunity. The same goes for this one here. So this alert to sell came on Tuesday, but the stop loss again is nearly 70 pips, and we have a maximum of just 50 pips. So I didn't take this one either, even though again price was under the multi-time frame moving average, and of course that is one of the criteria in order to sell. You'll notice here we had a buy signal, and exactly because price is underneath the multi-time frame moving average, we were only looking to sell, not to buy. Of course it would have worked out quite nicely, but we was only looking to sell the market while price is underneath this multi-time frame moving average. If you want this multi-time frame moving average indicator, just go to oldmanwisdom.co.uk and you can download it for free there. But what might we expect for next week? Well, what we would like price to do is to move up to roughly where the multi-time frame moving average is, along here, and then maybe with a little bit of up and down, there's a good chance actually that price might even go slightly over before we see it drop away. So we would have to get the indicator on the MACD here to give us a sell signal with price underneath the multi-time frame moving average. We would need price to be underneath, and of course this MACD has to move a little bit more before we get the opportunity to sell, before the signal will paint on the screen. This is a non-repaint indicator. It's called the 1 hour power. Again, you can get it from my website and use it on your charts, but maybe we'd like to see this kind of pattern before we sell away next week. Ultimately, of course, it could go the other way, where price bursts through the multi-time frame moving average, bounces back to roughly this level before it moves onwards and upwards. So we don't quite know, no one really truly knows what the markets will do. But of course, the main criteria here is that in order to sell the market, the price has to be underneath the multi-time frame moving average, and in order to buy, price has to be above the multi-time frame moving average. And then we of course wait for a signal from this MACD based indicator. So these are the two options obviously that we have, to buy or sell. Well, that goes without saying, but the main two rules of this are that not only does price have to be below the multi-time frame moving average to sell and above in order for it to buy, but we have a maximum stop loss of 50 pips. If the stop loss is going to be bigger than that, like in this example here, then we just are not interested. So that's the possibilities we've got for next week regarding this indicator-based strategy. But what about the price action strategy that we have? Well, notice again the rectangle here, the blue rectangle, represents where the market started. So exactly the same as in the other example we gave. The EURUSD obviously went upwards. And what we said last week was that we wanted to sell at around this area here. I put this line last week, and that's kind of what we did. It got nearly up to the level, and then we had a sell opportunity here. We even had it again a bit later where it touched exactly on the line and we had the opportunity to sell. You'd had to have been quick in order to take your profit though, in this example later in the week, because price shot back up and now it's gone through this level that we drew last week. But what about the week ahead then? Well, you notice here that it's certainly in a bit of a trending upwards situation. And again, this level here is seems quite an important one. We could extend it and use it as an opportunity to buy. But ideally what we'd like to see for next week is price to go upwards again and even come back to this same level here. If it does, then we can look at maybe buying and see the price go even higher on the Euro USD. So that's what I would like to see next week. And that's purely on the basis that we are now in a nice kind of uptrend move. We can literally draw a line here where we can see that kind of pattern has formed. And we'd like to see the uptrend continue for next week. And this certainly seems a key level here where we could expect to buy. So price might just dip slightly below this trend line. Trend lines are not really an exact science, I've said that before, but we can have a little plan of action. If price comes to around about this level here, then our stop loss can be quite tight under here. And of course we can look at maybe doing a 2-to-1 or even larger risk reward trade. We could risk 35 pips to make 70, or we could even go to a 1-to-3 risk reward. But ideally, we would like to take our profits above this high here. So we could even be looking at a 1-to-5 risk reward ratio here, risking 35 pips to make 175. That would be a really nice trade if it worked out next week. In my mind, I always like to keep the stop loss to a reasonable amount. Just like the indicator strategy I showed earlier, I have a maximum stop loss of 50 pips. In this particular instance, I would be looking at a stop loss of around 35 pips if price came down to around about this level here. I certainly wouldn't risk any more than 50 pips on any one trade. That's just my rules. Of course, you can make your own rules up. That's no problem at all. But this is a pretty sound strategy based on the fact that we're in a nice upward trend. So there you have it. That's the Euro USD. That's my outlook for next week. We had a little trade this week based on the price action. We actually sold even though price was moving slowly upwards and it made a higher high. We still sold and made a few pips this week. So hopefully you caught something. If you're a better trader than me, you might have even caught this large upward move here. So that's a review very quickly on the Euro USD of both what happened this week and what we might expect for next week. If you enjoyed the video, please give it a thumbs up. And of course, don't forget to subscribe and review some of the other videos like this one here. So have a good weekend and I'll speak to you soon.